Welcome to Market Matters. I'm Charlotte Chong, joined by Nadia Hassan. It is the last day of November, and throughout the day we have been seeing a trickle of results coming out.
The last of the stragglers, I think.
Exactly. Now, when we look at RHB Capital announcing their results today, actually their net profit fell 67% on lower net interest income.
If you've been following the show, we've actually been following all the banks. Last week we talked about CIMB, we talked about, I think, Public and Hong Leong. So I think this is the trend where only Maybank seem to come out unscathed. So it'll be interesting to see.
So when we look at the entire banking industry, their financial are not doing very well, and that's why they have started laying off.
Yeah, that's the biggest thing. But also big in the news, apparently, is that FGV, Felder Global, which we're not talking about today, might abandon the Eagle High deal. So I think people will rejoice and go into paroxysms of ecstasy in the sense that this deal has been such a lightning rod, it's been so controversial. I don't think abandoning it will be bad.
We'll probably start talking about it
eventually, if they actually do. But yes, but what we are talking about today is...
Yeah, talking about plantation stock. Company in the news today is Bousted Holdings Bhd. Now this company, they have different sort of sectors, and the main sectors is, plantation, pharmaceutical, property. Now, they actually announced their result today. Third quarter profit slumped 67% to 6 million ringgit, due mainly to lower contribution from all their sectors.
Yeah, so
very well.
MD Tan Sri Lodin Wak Kamarudin, of course, LTAT holds a stake in Bousted. It's been a trying economic period, according to him, with external pressures impacting the group's earnings. No, really.
I think it's because if your company is exposed to so many sectors, it's very difficult to mitigate risks in any kind of sector.
So now we've come back to the conglomerate discount, and we've talked a lot about this, where, on the other hand, looking at their share price, up about very 0.74% to 4 ringgit and 7. But the thing is, if you like plantations, or if you like property, or even if you like their heavy industries, why buy into Bousted when you can actually buy into those direct?
The individual company like Berjaya Food or also IY Property.
Yeah, so if you were given a choice, right, would you buy Berjaya Auto, Berjaya Food, or Berjaya itself?
I would buy Berjaya Food.
Yeah, exactly, because you want that kind of,
the direct exposure.
Yeah, so it wonders about whether, when you hold this, you looked at, but all the divisions in general just turned out bad. I mean, plantations, of course, they're not new. They've been suffering from the CPO price drop. Trading and industrial division also 33% below lower of it. I don't see any bright spots. I'm not surprised it went down 67%.
The only two divisions that saw a hike in their revenue, it's their pharmaceutical divisions. Revenue was 1% better. And also
congratulations.
Okay.
Better than nothing, better than nothing. It's better than zero.
Now, property division actually saw about 14% increase in their revenue as well. Now, despite the financial results, the company actually declared a third interim dividend of about 6 cents.
Yeah, I think they will keep doing that as the parent. But again, if I wanted exposure to property, I buy Bousted Properties. So, for Outlook, if you looked at their notes, they put on a brave face, say that it's going to be tough in the face of volatile CPO. Weak commodity prices, the weak ringgit, all are going to weigh on them, but they still think that because of their link that they have with government, because they do get a lot of the government defense contracts, they think they will still come out of it fairly unscathed. So yeah, they said that, and here's the other thing. So the diversified nature means that you are protected. If 3 don't do well and 3 do well, you're still all clear.
Actually, when I look at their past a few quarters of results, the profit actually has been down for 3 consecutive quarters. Now, European KK actually came up with a plantation report today saying that they are still maintaining an overweight in the industry, and they actually revised the ASP, which is average selling price of CPO, to 2,400 or 2,500 because they think it's it's getting better in the industry.
So what's your takeaway from all of this?
I am still a little bit giddy about company that is exposed to so many sectors. Now, to take it all home, the company share price actually rose 0.74% to 4 ringgit 07 today. And third quarter net profit slumped about 67% to 6 million ringgit. Revenue was down as well, 22.2% to 2.1 billion ringgit. Now, let's move on to our last segment,
which is Insider
Asia Stock of the Day.
Hexza Corp Bhd. It's interesting. Tell us. I've read this. What's your interpretation of it?
Well, this company, they manufacture adhesive resins used by the plywood, chipboard, and furniture industry. And I think it's still probably a positive company because they are exposed to US dollar because they sell all these products to overseas, to companies in overseas to build all these furniture.
Yeah, so they actually went up about 1.15% today to 88 cents. It's not going to break the bank at 88 cents. It's still fairly quite good. And what Inside Asia likes, because we were reading through the report, they think it's attractively priced, as we were mentioning, talking about the share price, to the two fast-growing sectors, which to them, they think there's still some kind of gold, the beneficiaries from the depreciating ringgit, wood products, pharmaceuticals. They think that these two will be good enough, and these guys have a foot in both.
And both divisions actually contribute about 61% and 39% to the overall group's revenue. Furniture and wood-based stocks, they compared with other companies as well, trading at around 8.8 to 17 times earnings, have seen their prices up 100% to 250% this year.
Exactly. So we've been, okay, we started the show probably about August, like that, and we have said the story quite before, that the furniture guys, everybody on that bandwagon, you were just, the trick was actually finding the guy who wasn't that expensive yet, and they do think that Hexza has an attractive, what they call single-digit trailing ex-cash PE of 6.5 times. And this is despite the fact that the share price has gone up about 36.6%. You want to translate that into English? Essentially, they think at this level it still can move.
Still manageable. Now, why I actually like this company? Because Hexza has a strong balance sheet of about 62 million ringgit of net cash as at end September.
Are we surprised?
Not surprised. And this amount actually amounts to 31 cents per share, or 33% of its current market capitalization. Now, dividends stood at 4 cents per share from FY June 2014 and rose to about 4.5 cents for FY 2015, giving a decent yield of 5%, which is still higher than
most. Yeah, I actually like this in the sense that, and I saw this whole thing about balance sheet strengthening further. I think it gave everybody a bit of ooh kind of thing, was that a subsidiary, North Chem Residence Bhd, which is under their umbrella, they apparently will dispose of land and buildings by March 2016 for 17 million cash. So, like I said, I think people just went, ooh, it's good, stronger balance sheet. It
dividend
makes
from
me
there
all
as well.
happy and stand up.
Now, net profit actually rose about 88.1% to 7.9 million ringgit.
Very decent.
Revenue actually went down 5.1% to 37.3 million ringgit.
Do you know what that means? That means your margins are great. That means your margins are fantastic, and I think this forex thing will continue to. We will see more of these companies when everything starts to digest down to their books. Again, what happens though when the party stops? You know, what happens if the ringgit happens to strengthen? Although at this point, I think it's more of a joke.
To bring it all home, today we have Insider Asia stock of the day, Hexza Corp Bhd. Why Insider Asia likes this stock? That's because Hexza has a strong balance sheet with net cash of 62 million ringgit, which amounts to 31 cents per share and 33% of its current market capitalization. Dividends was at 4.5 cents for FY 2015, which translates to a decent yield of 5%. Thank you for watching. I'm Charlotte Chong, joined by Nadia Hassan. Good night and good luck.